So, hello everyone, and today I'm going to talk to you about trading after hours. So, now you'd probably be wondering, like, why or how can I trade after hours? Like, I don't have the access to traders. So, if you are a stock trader, you would not have the ability to trade after hours. And what I mean by that is after hours. So, the trading hours are defined from 9:30 to 4 p.m. That's the trading hours. So this is where everyone would have access to trade, and this would be from Monday to Friday. Okay. Now, what's after hours is that there's two different variations to after hours. So one is pre-market and post-market trading. So if you've been like tracking the market, you probably see a few stocks like already rallying up and down, like before 9:30, and the market's not even open at this stage, but the market is already moving in a certain direction. I apologize, that's my cat here who's just playing besides me, and I was like, what just happened? But oh, it's just his toy. So back to where we were, the pre-market and post-market. The market does tend to rally pre or post market, and this prevents, or this actually happens so that the traders can, or the day traders can get into the market when the news happens, or get an early momentum into the market. And not everyone has access to this. So you can apply to a brokerage firm that would give you access, or there could be a special access requirements. Consult your brokerage firm on how you would get into it. But pre and post market hours is one way you can get into the market early. What I'm trying to talk to you today about is trading after hours in terms of the futures market. And the futures market lets you trade after hours any time of the day. So the futures market is open for 23 hours per day. Okay, so that's a long time. Like 23 hours of trading, you'll make so much of extra money than just trading from this 9:30 to 4. This is much better. But the downside is that the volume when you trade in the futures market outside these hours is very low. So what that does for you is, so say for example, the stock market was kind of, this is the range going up here. And you'd be like, okay, it's a good uptrend. I'm going to just continue making money, and this would possibly equate to, a full bodied candle. So this is just assume this is a small wick here, and this is a green candle. I can change the color. Maybe I'll change the color and show you. Look. So this is the green candle. Okay, so. Yeah, it is gone to a green candle, and it's showing you a positive direction. However, what it would do in the after hours of the market is it would go down and would kind of just rest a bit. And the next day when the market opens up, so say this is 9:30, it will again come back up and make a new high. So it'll kind of make a new high from there. So what it did was that you were kind of sold at or you decided that, I want to make more money after hours because it's been a good strong rally, and this has probably been 9:30 a.m. This is going to be 4:30, and then from 4:30 to 9:30 it kind of took a dip and you've lost money, but it kind of caught up again here. So the next candle that opens up is also positive. However, the wick here is actually lower, and that's basically what you're seeing here. So it's just me transferring a line chart into a wick, and this is where it is probably right now with a small downturn here. Okay, so now it's perfect. So that's 2 days of play for you, but by buying it around this level, or buying it after hours, you've risked buying it at a wrong time, and you lose money in that process too. Now, another thing that happens is that the markets could probably be range bound after hours, and that's something that often happens. Is the market was in a strong rally, and then it just kind of like started range bound, and then after hours it'll again go up there. So that's another thing that could possibly happen, and also because different markets are opening. So I'm going to give you an example of like the Europe would open at a certain time. The Asian market could open at a certain time, so that would also like cause issues where you would get in. The market may react. The futures market could react to that as well. But having said all of that, like I'm saying, like okay, don't really get into after hours market. There are positives as well. So sometimes if the Asian market was extremely like bad news, getting in after hours would save you. You could actually get out of the market after hours as well, because otherwise you would have to wait for the next day, but the market's already tanked all the way to the bottom, and you can't you would have lost a lot of money. So in some ways, exiting the market could be beneficial if you're trading after hours. However, saying that like try to be aware of what's happening, but don't really step in and step out if you don't really need to. So intraday or day trading after hours is an extremely like forbidden. I would say it's extremely forbidden. I would not that it's not allowed, but I would say it's not good to. And the reason being that by day trading after hours, it would cause you to lose more because of the choppiness, not enough volume. The best time to trade, and this is just me deviating from after hours, which is the concept of the video. Well, the best time to place a trade is just before close, and this is historically proven. If you're a long-term trader, if you're a weekly, daily time frame trader, anywhere between 2:30 to 4 is a good time to either buy or sell. The highest momentum or volume ever seen in the day is between could be 9 or say 9 a.m., but it's usually 9:30 to 10. So 9:30 to 10 is this time frame is like the highest volume that you will see in trading. So this people don't recommend trading at this time frame, and the reason being that this time frame is very volatile, so you'll see a lot of choppiness here. It could also go up, but it'll also go down. So a lot of the long-term professional banks prefer this time to get into the market. So this is like the sweet spot for them. So lot of theory for you. So to recap what I just talked about, trading after hours, pre-market, post-market is another way of trading after hours. However, for futures market, it's open a lot, but there's lesser volume, so avoid trading after hours on the futures market. Better than that is to focus on trading at a certain time frame in the day between 2:30 and 4 for long-term trades. Also keep an eye on the market after hours. If there is some bad news, it's always good to exit the market, like if you can, or if it's required to. But keep in mind that the markets may just correct itself and then go back again the next day up. So there has to be a really significant, like the World Trade Center crash or something, to take a position. Otherwise, you could just kind of stay on the sidelines for the next day markets to open. So I hope this was helpful, and I wish you all the best in your trading journey. I hope this will help you to give you opens a few new doors into your mindset of the market and how you trade. And wish you happy trading, and I'll see you very soon.